Spiking inflation is pinching household budgets by raising the cost of living. It threatens to put an end to rising stock prices too, which is why it may be time to prioritize investing for income over potential gains. Welcome to Wealthion. I'm Adam Taggart, founder of Wealthion, here with a short explainer video on why income investing makes increasing sense in today's environment of rising inflation. A spoiler alert, at the end of this video, I talk about a free report Wealthion has just published that covers the most popular ways to invest for inflation-adjusting income. If you want to skip the video and just go straight to the report, you can get it right now for free by clicking on the link provided in the description below or by going to wealthion.com/income. Okay, first let me provide some brief context to explain why income is becoming so important. Here's a tweet I published recently that really hit home for many people. In 1985, banks' savings accounts offered an 8% return. Savers could build wealth over time, and retirees could live well off of a fixed income. Today's rates are a paltry and insulting 0.06%. Savers/retirees have been sacrificed in favor of the rich. Thanks, Fed. Just reflect on that for a moment. A generation ago, you could get an 8% return in a bank savings account, one of the safest investments out there. Short-term treasury bills were offering similar yields of 7.5% or higher. At that rate, your savings would double in less than a decade. But at today's rate, doubling will take over 1,000 years. Back in the mid-'80s, if you'd worked hard enough to have $1 million saved up by retirement, you could have put it all into treasuries and received $80,000 a year in income without touching your principal. And $80,000 was a princely income back then. Today, $1 million in a savings account will generate a pitiful $600 annually. Maybe $1,000 if you put it in T-bills. Now, first off, the median net worth of Americans 65 years of age and older is nowhere near $1 million. It's actually less than $300,000. And second, even for those fortunate enough to have $1 million saved up, no one can live off the measly $600 to $1,000 it would generate in annual income at today's rates. So, the math clearly shows that both savers and those hoping to live off a secure fixed income have been totally gutted by the Fed's intentional regime of rock-bottom interest rates. But as I said in my tweet, it's actually more accurate to say they've been sacrificed in favor of the rich. Why? Because the Fed's policies, again, completely intentional, to drive interest rates down near zero and to push billions and then trillions of dollars worth of monetary stimulus into the system over the past decades, have predictably driven the prices of most assets, like stocks, bonds, and real estate, to record highs by a tremendous amount. And the benefits resulting from these higher prices have overwhelmingly and disproportionately accrued to the very small percentage of U.S. households that own the vast majority of these assets. To drive this point home, the top 10% of Americans now own 89% of all U.S. stocks. So nearly all of the $7.7 trillion in stock market gains made over the past year and a half during the recovery from the pandemic have gone into the pockets of that top 10%. Look at how fast just the top 400 U.S. households are hoovering up an ever greater and ever accelerating percentage of the country's wealth. This is merely the top 0.00025%, and yet their wealth is now nearly 20% of America's GDP. So, yes, I think we can plainly state that the Fed's policies are indeed tremendously benefiting the rich at the expense of everyday savers and retirees. Though I suppose I should say seniors instead, as the majority of these folks can no longer afford to retire. But wait, it gets worse. The trillions of dollars in monetary stimulus issued over the years by the Fed now joined by additional trillions of dollars in fiscal stimulus unleashed by Congress, are now resulting in cost-push inflation. And shortages caused by breakdown in global supply chains are adding demand-pull inflation on top of that, which is why we're now seeing the worst consumer price inflation in more than 3 decades. Basically, all of the essentials for living, like food, housing, and fuel, are suddenly becoming a lot more expensive, putting a painful squeeze on the average American household budget. So, savers and seniors have been denied a safe return on their capital. And now, increased cost of living are eating into that capital more aggressively. So what are their options? Well, as I've said many times on this program, the actions of our policymakers are forcing households farther out up the risk curve, away from safer investments that used to generate a meaningful return, but no longer do, and towards much more speculative instruments that have been rising in price in response to all the stimulus our officials have been doling out. Now, if the future continues to resemble the past, and the stock market continues setting new highs year after year, well, then average investors should be okay. They'll be riding the coattails of the rich, benefiting from the same tailwinds. But as regular viewers of this channel are aware, there are many valid, very valid reasons to fear that the Fed has blown the largest speculative asset bubble in modern history. Future price appreciation is going to get harder and harder to come by, especially with the Fed starting to taper and even possibly tighten, and with Congress finding it increasingly harder to get new fiscal stimulus passed. Indeed, bubble expert John Hussman now calculates that the general market return over the next decade is actually likely to be negative, averaging a loss of -6% per year for the next 12 years. Such losses will hurt most those investors sitting the furthest out on the risk curve, owning the most speculative assets, like today's richly valued but unprofitable tech companies, meme stocks, certain crypto tokens, etc. All right, I realize this paints a somewhat grim picture, with no safe yields and rising inflation on one side, and the end of rising asset prices, maybe even a correction on the other. How can a prudent investor sustainably build wealth in such an environment? Well, here's where income investing comes in. Most people forget this, but the overwhelming amount of long-term investment returns from the markets comes from stock dividends and interest incomes, not higher prices. This chart shows that over the 40 years from 1980 to 2019, 75% of the S&P 500's returns came from dividends, much more than came from share price appreciation. The key point to take away from this chart is that income returns are like the tortoise in its famous race versus the hare. They're the slow and steady approach that wins the race over time. Not only have they mattered more historically in terms of building wealth, in an inflationary environment, income streams that can rise at the same pace as inflation, or even faster, provide valuable protection. They prevent the inflation monster from reducing your overall purchasing power. Rental real estate has this advantage, as do businesses that can successfully pass input cost increases along to their customers. As many of the experts who have recently appeared on this program have said, active investing is poised to make a comeback out of necessity. Simply buying an index and holding on as all boats rise, those days are likely over. Future returns are going to accrue to those who do the homework, who sniff out the companies with good fundamentals, solid financials, and strong pricing power that can deliver dependable income regardless of what asset prices are doing. Now, this requires a pretty big mindset shift from how most investors have been trained to think. Today, it's all about buying in to catch a rocket ride to a higher price tomorrow. Going forward, it's likely going to be much more about purchasing an income stream that will put money in your pocket again and again and again. Not only do investment income streams build wealth over time, but they also increase financial resilience and ultimately enable the ability to retire. I mean, it makes sense, right? The more passive income your portfolio generates, the less dependent you are on a job to cover your living expenses. So, what are the options out there for income investing? The good news is there are a lot, way more than I can go into detail here without making this video at least an hour or longer. It's a wide spectrum that ranges from high dividend value stocks to short-term lending, to real estate, to royalties, to side businesses, and that's just to name a few. This is why I've written a helpful primer explaining the most common solutions available to income investors that you can get right now at wealthion.com/income. It's completely free. You should find it a very useful resource in helping you learn what options are out there and which ones may make the most sense for you. So priority number one is to go read that. And I recommend printing it out so you can make notes on it. And if you're new to investing in these types of instruments, then I highly recommend talking with a professional financial advisor about them. They'll help assess which are most appropriate for you given your personal financial situation, your goals, your risk tolerance, etc. Send the primer I just mentioned to your advisor and then sit down with them to hear their advice. And if you don't already have a good financial advisor to do this with, then consider scheduling a free consultation with the ones Wealthion endorses. There's no commitment to work with them. They'll just give you their honest feedback. And again, it's completely free. To schedule one of those consultations, just go to wealthion.com and fill out the short form there. And with that, I'll wish you a happy Thanksgiving, whether you're watching this video from inside the US or in a country outside of it. I am hugely grateful to everyone who watches these videos and is helping to make Wealthion such a valuable resource for financial education, especially those of you who care enough to share your feedback with me in the comments section. As always, please take a second to further support this channel by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it if you haven't already. And don't forget to get your free copy of our free primer on income investing by either clicking on the link provided in the description below this video or by simply going to wealthion.com/income. Happy Thanksgiving all, and thanks for watching.